Welcome to 2020 Day Trader and setting up the trade plan for the year 2021. So I'm going to show you how to set up my trading plans for my day trading, swing trading, and futures market. So we're going to break this up into two parts. So this is part one, and then this will run about 30 minutes, and then we'll jump into part two on a separate video. Okay, so let's get started with the first part. All right, so here we are in 2021. So the first thing I do before the year starts is create a trading plan. What is my plan for the year? What am I going to do? So the first question I need to ask myself with creating that trading plan is, what's the strategy that I'm going to use? So, and to know what strategy I want to use, I need to know what fits my lifestyle, my goals, and my personality. So can I trade on a 1 minute chart, or is that too fast for me? Can I trade on a 1 hour chart, or is that too slow for me? Can I trade on a 5 minute chart, or does that take up too much of my time and I'd rather be on a 4 hour chart? So, and the reason why a longer time frame could take up less time is when I trade on a 4 hour chart, I only have to come and check my computer every 4 hours because I trade on that close of the candle. So every 4 hours I pop in and check it. So 3 times a day, basically I pop in, or 2 or 3 times a day I could pop in, and depending on what market I'm in, and just look at my charts for like a minute and walk out. So literally it could take me 10 minutes a day to trade on a 4 hour chart. Whereas on a 5 minute chart, I can be at the computer for 8 hours managing my trades. Or maybe I vet my system so that my time frame is only 9:30 to 12 every day, or 1. And then I just vet it for that. And then that's my captive time. So all these different questions you got to ask yourself. So definitely a 1 minute chart requires constant attention. A 5 minute chart, a little bit less attention. A 30 minute, 1 hour, 4 hour daily, a lot less attention, so it takes a lot less time. The other thing is, on 1 minute charts, sometimes the movement is really small compared to a 5 minute or a 1 hour or 4 hour chart. So sometimes you can actually make more money with less trades trading a bigger time frame. But it all depends on your strategy. Other times you might be able to make more money on the slower time or the faster time frame, like 1 minute, but your trade frequency would be so high, you just have to make sure that commissions isn't going to hurt you. So a good thing is a lot of brokers don't have commissions anymore, but I know a lot of traders who day trade, at least when they're starting out, trade with offshore brokers who do have high commissions. So a 1 minute chart, if you're popping in and out of trades like crazy, might get really expensive in commissions. It might not be worth it. So all these factors have to take into account my decision. And then it's, what markets do I want to trade in? Do I want to trade equities markets? Do I want to trade in the futures market? And all those kind of things go with that. Do I want to day trade? Do I want to swing trade? What is it I want to do this year based on what my plans are? Do I have time to trade? Am I going to open up a new business and that's going to take all my daytime hours and I'm only going to be able to trade in the evening? So now I'm looking at swing trading in a futures market. So those are all those kind of factors that got to go into your plan. So I'm going to show you how I developed, what my plan is for this year. Those are the factors that went into my decision making. So what I'm going to do is I'm going to trade futures and random. I trade it sometimes in the morning, sometimes in the evening, sometimes in the overnight hours, depending where I am in the world with time zones. Sometimes it's better for me to trade the overnight hours because I want to be able to sleep a normal shift if I'm in Japan or somewhere like that. So futures market, random times. Day trading the equities market. When I do that, my plan is going to be 9:30 to 12, maybe 1 o'clock at the latest, but I'm going to try and be done by 12:30 every day, day trading. And then I'm going to swing trade. So I'm going to swing trade a list of tickers there. Okay, so now that I know I'm going to do those things, what's the strategy I'm going to do to trade those? So my strategy is going to be using the simple switch algorithm that I created. And then each area has different strategies. So for my day trading, I have my simple switch day trading strategy. For my swing trading, I have my simple switch swing trading strategy. And then for the futures market, I'm doing some stuff different this year. So I'm trading my simple switch futures strategy with all these are with my simple switch algorithm. And there's an algorithm for each area. So I have an algorithm for day trading, futures, and an algorithm for day trading, an algorithm for futures trading, and an algorithm for swing trading. So this year, I am dropping my futures red dot strategy, and I'm adding a 1 minute time frame strategy. So normally I trade futures on the 30 minute and the 4 hour is what I do. and I had I had 2 algorithms for the 30-minute and an algorithm for the 4-hour. So this year I've dropped one of those 30-minute algorithms. So now I have one for 4 hours, one for 30 minutes, and one for 1 minute. So the 1-minute algorithm that I created is pretty nice because it allows me to come in at any time of the day or night, and typically within an hour or so, I can make my money and be done. So, and I say that because sometimes there's consolidation and that 1-minute chart is just going sideways. And in the futures market, I need to have enough of a move to make a big enough profit to be able to offset commissions. So if you're going to, for my strategies, they're typically risking one to make one is typically. My sniper is a little different, but and same thing with red light, green light, but for the most part it's risking one to make one. So, and this new red line strategy for the futures, 1 minute, is risking one to make one. So what happens is if I'm pay $5 in commissions and I'm doing some really small movements, then I could be looking to make, $15 in a trade minus $5 for commissions, take home $10, right? But then if I lose on that trade, I'm losing the $15 plus commission, so I'm losing $20. So now I'm losing 20 to make 10. And I don't want to do that if I don't have to. I mean, if there's a high enough success rate, then maybe it's not a big deal. If I'm looking at an 80 to 90% success rate, I can still make money on that. But I don't want to do that. So my algorithm is designed on the 1-minute candle, but with enough movement to be able to allow me to offset commissions. So that's kind of the plan. So I'll be showing that to you a little bit later. So that'll be different for this year. So we'll change that up, and you'll see that in the new videos. Okay, so now I know what I'm going to trade. I know my strategies. I know what my lifestyle, my goals, my personality, check, and check. Now I got to figure out what am I going to fund my account with? How much money I'm going to put in there? So there's 2 factors that can go into this. One, maybe I just, however much money I have is what I have, and that's pretty much, that's it. Or maybe I have a little bit more money, but do I really need to put all that in my account? And actually there's a third one, and that's just I got so much money that I don't know what to do with it. Then how much of that should I put in my account, right? So some of that factor is going to be how many tickers I'm going to trade. So if I'm going to trade day trading, I'm going to trade 5 stocks, and all 5 of them can hit in the same day. All 5 of them, say, are $50 stocks or $100. We'll say all of them are $100 stocks. So if all 5 of them are $100 stocks, and all 5 of them are going to move on average per trade, let's say that they don't move that much, which normally a $100 stock will move pretty good. But just for this demonstration, let's say they move 10 cents. That's all they're going to move. Well, if all of them are going to move 10 cents and they're $100 stocks, how many shares of those stocks do I need to buy to make it worth it for me to trade them? So, and then that is going to determine how much money I need to have in my account, because I want to be able to buy all 5 of them at the same time. Because if I can't buy all 5 of them at the same time, then I'm going to have to get lucky in my decision making. Because when one hits and another one hits soon after, and I traded that one and it was a loser, and the next one was a winner, and I wasn't in it because I didn't have enough money, and then the next trade that I do get in, because now I can get in, is another loser. You see how it goes? Now I have to be lucky on that day to win. I want to have enough money in my account to be able to trade all my tickers at the same time. So that's going to be one factor in deciding how much I need to fund my account with. So so that's if I have enough money to do everything. The other thing that might determine stuff is maybe I only have a certain amount of money, so maybe I can't trade that many tickers. I got to look in either maybe my tickers don't move enough for the money I have to offset commissions, so I got to think about what tickers I'm going to trade and how much money, what they cost and how much I'm going to make per trade. With my algorithm and others, I know there are other strategies out there too that have something to trade against. So you can get a pretty good idea if you can back test the concept or the ticker to see the average move that you make on that. Most of my tickers give me around the same average movement. I'm going to make between 25 and 30 cents per move on this one. On the other one over here, maybe it's 75 cents and 80 cents or whatever, or $1. So I can get a pretty good idea of what I'm looking at with my tickers using the algorithm. So it helps me plan a more accurate trading plan. All right, so what I'm going to do after taking everything into account is I'm going to, on my day trading account over here, my starting balance is going to be 27,500. That's my day trading account. So why am I choosing 27,500? So if I have 30,000 or 40,000 or 50,000 to put into a day trading account, why not put it all in there? Well, the biggest thing is I don't want to have more in my account than I absolutely need to trade my plan. Every dollar I have in my account over what I need to trade my plan is going to be money that's at risk. If I make a mistake, something weird happens, all that money can be gone. So if I only need 27,000 to trade and I put 100 grand in the account and something weird happens, I could lose 100 grand. Why would I do that when I really only needed 27 to trade my plan, right? Doesn't make sense to have that money at risk. So, and that's why I don't think, for me this year, I won't keep more money in my account than I need. So once I get to a certain threshold on the growth of the account, I'm not going to, every month I'm going to pull money out because I don't want to have that money at risk. So starting at 27,500 is what I need to trade my plan because I need to have room for, a bad start. So if I start off with a losing streak, I want to survive that losing streak. I also have to take into account the pattern day trader rule, the PDT rule. So Thinkorswim requires me to have at least 25,000 at the open of each market day to be able to day trade. So I need to have at least that. And then that gives me 2,500 that I can lose if I have a bad start to get going. And we're going to look at the scaling ladders and all that stuff to see how we're going to plan it out so that we can properly manage our risk. So that's how I'm going to start with my day trading account. So then on my futures account, we're going to get a little crazy on this one, and we're going to start with $1,550. So why are we starting with $1,550 in the futures market? Because Thinkorswim right now requires me to have at least $1,500 in my account to be able to trade. So yes, that only leaves me $50. I lose $50, I can't trade. I'll have to add funds to that account. The way the futures market is, it can be pretty dangerous to an account. If you're an experienced futures trader, you know what I'm talking about. It can be you can very easily, because of the way the leverage structure works, blow up your account and lose all your money really fast. So I don't like to have more than I absolutely need in futures. So what I'm going to do is I'm going to trade with $1,550. And then, if my first couple trades are losers and I go below the threshold, I'll deposit money into my account. With Thinkorswim, when I do that, I can have money in there by the next morning, and I won't really miss that much opportunity. Sure, while I'm waiting for funds to get in, I could miss out on the winners, then get back in to buy losers. That is a possibility, but it's a risk that's worth it to me because I feel really confident in my strategy, my algorithms. So $1,550 is what I'm going to start with. Have a bad start, I'll add more. Have a good start, then I should be good to go with that the rest of the year and not need to worry about anything there. And then I'll start pulling money out again as I have more in there than I need. So swing trading, I'm going to go ahead and use this account down here, account 1, instead of this one. This swing trading account on this log. If you're interested in getting a log that has risk management tools and all that stuff, there's a link below where you can get a link to this log here. So swing trading account, this one doesn't reflect in the calendar. It only lives here. So I'm going to go ahead and use account 1. And the way you fill in the data is different between the two. This one definitely has some benefits over this one, but I'm going to go ahead and use this one for this year's swing trading account. So swing trading, I'm going to just trade off of the same $27,000 account that I'm using for day trading. So that's going to factor off of it. So I'm just going to go ahead and leave that as leave this as a 0 right now. So, and the reason I'm leaving that as a 0 is because when I get into the scaling ladders and all this other stuff, it will affect what goes on here. But I'll still be able to get all my tallies for swing trading in this account. It'll still show up, and I'll be able to see what my year-to-date totals are and all that. And all that will then also add up to my combined account totals. So, but this is the one I'm going to use for my swing trading, and I'm going to combine those accounts. It's one account, day trading and swing trading. Futures is trading on its own separate thing. Another way I can do this if I wanted to is just to allocate funds for swing trading. So on my $27,500 day trading account, if I wanted to start with a $2,500 swing trading account, it could be the same account, but I just put 27,500 here, and I can put 2,500 here, so I can track. And then in my scaling ladders, in my risk management plan, I separate those monies out so that I can have the proper risk management for each account. Okay, so the next thing I need to do is determine my risk management plan and what's my strategy going to be as far as risk management, scaling, and all that stuff. So in order to be able to determine that, I need to look back in history and see what my trading year was like last year. I trade the same tickers every day, and each ticker has their own little thing. So if you trade, not a ticker per se, but a set of conditions, then instead of like CVS up here SS, I would put whatever that conditions is, gap trade, whatever it is, momentum, this, whatever. And then I would look at those conditions and how I did last year because I tracked it in my log. If I didn't do that and I'm new to this, then I would, not that you're a new trader, but you're new to the strategy you're using or what, you went from conditions to tickers or whatever, then I would do a back test on it. So, and then here I have my backtest blocks, which I will track these tickers for all year. And then I'll reset these blocks and then keep going just to see if there's trending going on. So I get all the data in here. And this tells me that with CVS, with my simple switch, my normal simple switch strategy, this was my deal over the last 90 trading days. Here's my start date, my finish date. Here is my CVS switchback using my algorithm. It's a modified play. And then you can see the trade frequency. So now I'm starting to see how many trades I'll probably get every 90 days. And then I have my CVS opening range strategy using the algorithm. All these are modified plays, basically using the algorithm as something to trade against. This is the actual algorithm working in the day trading situation. This is me just reutilizing those tools to have something to trade against, because I wanted a higher trade frequency. So when I scroll down to the bottom here on CVS, with my normal algorithm, I had 17 trades over 90 days. Now that's great. It might work out fine for you if you don't mind sitting in front of the computer for 90 days for 17 trades. I need more trades and I'm going to get bored. So that's why I have this repurpose deal. And I don't have to trade CVS. I can look for another ticker who gives me more trades. But trading it works. So with my repurpose setup, I have a 75% win rate. Usually what I find is with a higher frequency becomes a lower success rate. So something to think about as you're doing your thing. So then over here, this other CVS, my opening range, that gives me 17 trades. So when I look at all of these trades and I add them all up, that's quite a few trades. That gives me a ton of trades to trade. And over here we have QCOM, which I trade with a modified setup as well. I don't trade it with the normal strategy because it doesn't work very well with the normal algorithm. But using the algorithm as something to trade against, it also gives me quite a few trades. So I'm looking at all these tickers now and seeing the trades I'm going to be able to make and getting an idea of how many trades over that many days and all that stuff. Why this is important is when I get into my scaling ladders, I'm going to be able to project out a potential return based on past performance. Now, past performance does not mean future results by any means. All these could go to garbage. I could blow up my account in a couple days, right? Like, you just never know with the stock market. I guess that's what kind of makes it fun, and you kind of get a little rush from it because you really don't know what's going to happen. Everybody says if you're hoping, you're not trading properly. Well, guess what? Every time you take a trade, you really don't know what's going to happen. There's always a little bit of hope. You can have a lot of confidence in your strategy, but there's a little bit of, I hope it works today, because that's the market. So anyway, once you've got all your tickers in that you're going to trade, so I have mine here. So you can see CVS, I have 3 different deals I'm dealing with it. Then I have QCOM over here, APPS. So there's 3 tickers there, and then I have these other 2. So 5 tickers is what I'm looking at juggling for my day trading. And then I come down to my futures market, and then I've got my futures market in here. Red light, green light, sniper, and then on a different tab, because it's a 1-minute futures strategy. I'll just go there now. Black back test 2. So we have our red line, and this shows you a small snapshot. It's a 1-minute chart, so there's a lot of trades. See all this red in here? It looks terrible, right? 69% win rate does not look good. And this bar alone, just because of the way it worked out, had 61%. But when you combine the two together, 67% win rate. How terrible is that? And when you see my videos 60 to 70% win rate, I show you how bad a 60% win rate can be, or even a 70% win rate can be, and how easy it is to blow up an account with that. But I also say in there that, it depends on your trade frequency, because maybe in the end your trade frequency makes it worth it. Still really dangerous. But there's a trick to this strategy. So if you were to take every one of these trades, this is what the results would be, and that would be a disaster, I think, because I do believe that if you're looking at a 70% win rate or less, it's it's just a slow bleed out to account destruction. That's my opinion. But I'm sure others will comment and say something about that. But that's what I think. So based on my experience. So I don't take all of these trades, but I did use this to help me determine how I want to play this and what I want to do as far as how many wins and losses typically occur and what's the spacing, and there's strategy that gets built. I use this to build on the strategy, and I'm going to keep doing this to keep giving me data to monitor the strategy to see if anything needs to be tweaked. But the red line strategy, 1 minute strategy, I've never had a red day on it. Knock on wood. I'll probably have a red day tomorrow now because I just said that. But I've never had a red day. It's been 100% winning strategy for me as far as day goes. I do have losses in my trading day, but I never had a red day. So in that sense, it works out to be a fantastic strategy, even though on the surface, it doesn't look so great. But having a good log allows you to be able to have this data, and then you can use that data to have a lot of green days. So anyway, so that's my my future strategy. And then I come down to my swing trading strategy. So APPS comes back up on deck, which kind of complicates things. I may replace this from my swing trading strategy eventually because I day trade it. And when you're holding a swing and then you're trying to day trade it, it kind of muddies the waters a little bit. So that may get replaced. But for now, it's there. And then I got my swing trades in there. And then we can see what the success rate is on those. I'm on backtest blocks too, so you don't have all of them there. So now you can see all of my swing trades. I'm starting here with XLY, and you go across Roku, and then down. And then we can look at the win rates on them. 84, 80, 80, 80, 93% win rate, 92% win rate. So win rates are fantastic. And this is over a 2-year period. So it's a fairly proven 93% win rate. So the algorithm is working awesome with these. So these will be my my trades for this year as they set up. So all right, so there you go. So now that once you've got your back test done, or you pulled last year's data in, then that can give you all the information, or a lot of the information you're going to need for the next piece, which is the risk management and scaling, and the scaling piece. All right, so let's start with swing trading. So how are we going to scale up swing trading and manage risk in our account? So you saw on the back test blocks, I can see, let's actually go back over there real quick. So come on down to here so I can look at past performance and get an idea. So Roku, I've only had one winner in the last 2 years. Not high frequency. My swing trading strategy is definitely not high frequency, but it is high reward. So, and then if I go back even more years, I do have a couple more losses in here, but I just went back 2 years. I don't really care to try to spend the time to pull in data from 4 years ago when it doesn't really matter right now. So there we go. So Roku. So what I'm seeing here is I don't have 2 losers in a row typically. I don't have 2 losers in a row. Very high percentage win rate. So I can be fairly aggressive. Whereas if I had a bunch of, it's on the other one. Let me just show you that ES as an example when we're looking at. So if this is what it looks like, then maybe I can't be so aggressive because I'm going to have a lot of losses in here. Maybe and back-to-back losses potentially and all that stuff, right? Maybe not a lot of winners in a row. So I can't be as aggressive. I'm going to be able to weather the storm on those bad days. So looking at these, they come down. I can see, APPS. It's got a pretty good deal, but I do have potential here for some back-to-back winners, or losers rather, and winners. But most of these I don't really have back-to-back losers or that many losers at all. So This is telling me that this year I'm going to be able to be fairly aggressive. And how many losers do I need to plan for? So remember, I can be holding all these at the same time. So I potentially at one time could have 1, 2, 3, 4, 5, 6, 7, 8 losers. Typically, I don't have more than 2 in a row, so I can have 16 losers potentially right out of the gate, right? Are the odds in my favor of that? No. Will that probably happen? Probably will never happen. But can it happen? Yes. So 16 losers is what I could be doing. So now I'm going to come over here to my scaling ladder because I do want to be aggressive this year. So I have 2 options now. Because I'm using my swing trading account and my day trading account combined, my day trading account, I'm actually going to trade off of this scaling ladder. I'm not using percentage. So in this case, to make it easy for me, see how that little finger goes from that plus sign to that finger? Because that finger is trying to click on this video link kind of intrudes into this area. So if you're using this, just got to be careful. And you have to unprotect the sheet before you can change this name. So I'm going to scroll up and then just keep going a little bit. There we go. So now I'm going to go ahead and change this to swing trading. So when I'm over here, I can easily see what the deal is. So and then I could hit enter. So now that's my swing trading account. So that's going to pull off the main because I'm sharing them. If I didn't want to do that, another option I could do is over here. I can name this my, I can change the title here, wherever I want to do. But I can come over here and add whatever my swing trading is. So let's say I was just allocating some funds. I could say 2,500. And then that becomes my swing trading account. So I can manually do it, and then I just have to color in the green. This will automatically color in green for me. You'll see this green go away once I add a percentage here. This one I'll have to manually do everything. This will automatically track. So you have those options with this log. So I'm going to put this back to 25,000. All right, so I'm actually going to take this to 27,000. So one thing nice about this over here, this manual section, is now I'm going to start with, let's say I'm going to start with a 2% risk reward. Maybe that's what I'm going to do. And then I can scroll down. I could have 16 losses, right? So this is 10. Each one of these blocks are 10. So we go 10, 11, 12, 13, 14, 15, 16. So at 2% each time, of course, I'm not going to lose 37,000 because my account's going to keep getting smaller. But that's, I'm starting with 27,000, and that's basically $10,000 that I'm potentially looking at throwing away with 16 losses if I start with 2%. Of course, the account is getting smaller, so it won't quite be that bad, but basically it's a lot. So then I can just look over here and say, well, 2% if I start with and I go straight loser is $540 a loss, $27,500 account. I can really only handle 5 losses here and I'm in trouble. So maybe I need to do 1%. Maybe we should be looking at 1%. Scroll it down, it's $270 a trade. 270 divided into 27,270. To pull up your calculator, 27,500 actually is what I'm looking at doing. So let's make this accurate. 27,500. So we're at 275. So pull up that calculator. And then divided by, if I go straight loser in the beginning, would I be able to survive 16 trades? So 100 trades blows up my account, but that means I'm not day trading once I go down to 2,500. So I don't want to go down 2,500. So I'm going to go 2,500 divided by 275. And of course, I'm doing the percentage, right? So as this is going down, this would get smaller as well and be exponential, so it wouldn't be nearly as bad. But this gives me an idea. 9 trades is pretty much what I would be able to do before I potentially run out of the PDT rule. So 9 trades is potential risk. Now, knowing that my account's going to get smaller and all of that, this works out pretty good for me because these I think will be basically be get cut in half as it slowly goes down. I'll end up in the half-life type of deal. So I'm okay with that. So I think, potential of 16 losses, knowing this will get smaller, which this will get smaller, I'm good. And then I can go and do the work if I want to see exactly what that would be to make sure. So we're going to say we're going to start this account with 1%. All right. So with 1%, and of course, day trading is going to affect this account. So I'm going to come over here and just do 1%. And with my day trading, you'll see this as we go on throughout the year. This will turn green and this will come back up and down, fluctuating between based on what my day trades are doing to the account and what my swing trades are doing to the account. So, and that's going to determine what my risk is. And then we'll get into the calculator in a minute. All right, so now 1%, I'm going to start there. So 275, blah, 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 blah. So I think what I'm going to do is once I get to 10 winning trades at 1%, I'm going to move into 2%. So now I can say, well, is that really going to be lucrative for me for the year? That's a good question. So let's go back over to our backtest blocks and look at that. So if I scroll down here, the first one. Okay. So this is 2 years of charting. I can go back and look and just see what a year would do, but for fun, I'm just going to cut these numbers in half. So right here we had, 11 trades, 13 trades, 11 winners, 2 losers. Winners pay for losers, so I'm taking home 9. Over here I got 9 and 3, not nearly as good. I'm taking home 6, so it's 15. And then over here we have 13 that I get to take home there. So say I'm going to round down to 20. And then I got 12, 7. So maybe, almost another 20. So maybe 40 trades there. And then we're going to look at these. We got about 11, 12. So 20, we'll say 20 rounded down, right, to the slow side. So maybe we have 60 trades. And then I won't even count this one. And we'll just say I have 60 trades for the year. So is what my potential is, but it could be a lot less. So I'm just going to round it down to 50. I'd rather go worst case. Okay, so we'll go back to the scaling ladder. So 50 trades is what I'm saying. So I'm going to get 10 of these, or 10, 20, 30, 40, 50. Bottom of this orange is where we're going to go. So I'm going to come here. And this is if I stay 2% all year long. So if I stay 2% all year, and I only swing traded and I didn't day trade, I would finish the year with 66,000 based on this number, making around 40,000 for the year, being somewhat conservative here. But you saw my win rate was pretty awesome. So I think what I'm going to do is after, as long as this year is progressing like I expect it to, once we get here, I'm going to go ahead and bump this up to 3%. And again, this is based on only swing trading. My day trading is going to feed this account, so I'm going to be able to do a lot more. So 10, 20, 30, 40, 50. And that's assuming I only get 50 trades this year. So with that 27,000, now I'm looking at around 88,000. So I can make around 60 grand swing trading in this account with this plan. Perfect for me. My day trading account is going to feed this account, and that is going to allow me to make a lot more money. So I could definitely be a lot more aggressive once I get started. Like I could go ahead and say, you know what, this year's going good, and I could adjust my plan. And I can come over and say, I'm going to go ahead and risk 4% of my account on a trade, which is breaking my normal rules because I never really want to have more than 10% of my account out at one time. But let's say I did break my rules. Now I'm looking at around 116,000. So now it's like 80,000 on the year if I get really aggressive later on. So, and I can make those determinations later based on how things are going. But I'm going to take this back to 2%. Because my day trading account is going to feed this account. So these numbers are going to go a lot faster. So these numbers will actually change over here as time goes. So now I know that's what I want to do. Let's go ahead and pull this 1 down. Then we're going to go to 2% here. Rocking it down to 2. And I'm just going to stay at 2 for now. So I'm just going to take this all the way down. I am not going to have this many trades. Because the other part of it is, can I afford to buy, to use that much money when I'm day trading also. So some factors I got to put in there, but there we go. So that's how I set up my risk manager for my swing trading now. Now I know my first trade is going to be worth, I'm going to risk reward $275 because I have a 1-to-1 strategy. Some of my tickers like Roku, I can get usually 2 or 3 to 1 out of it. But for now, it's just that 275 is my risk is. So now I'm going to go over to my calculator. Calculator 2 is what I like to use. So over here, what will happen is I will start with my scaling ladder, and I can quickly see what my account is because it's going to automatically fix these off of what's actually happening. So 275, so 27,775. I know with Thinkorswim that gives me a buying power. I'm just going to round it down to say 100 grand. I want to make sure I have enough money to do it. So over here, I'm going to go buying power 100,000 is what roughly I'm looking at. 275 is what my risk is going to be, risk reward. And then because of my algorithm, I know exactly what the potential move is. Now, I could be wrong, right? I could get in late. I could have slippage. It could gap. All kinds of stuff can happen, but I have a good idea. So if my first trade, let's say, is worth, I might have a $3.40 move on it. I want to make or lose 275. So I know I'm only going to buy 80 shares of my first, of that trade. So 80 shares is what it is. So, and then I'll do that for everything. And as my account grows, every time I'm going to take a new swing trade, I'll look on the scaling ladder and see where I'm at. I'm at the blue area because this is going to automatically highlight green as we go, which you'll see throughout the year. So it'll let me know where I'm at. So I'll be $303. And then when I go to make those trades, I just come over to my calculator, 303. So now I'm buying 89 shares of this because it's going to move $3.40 potentially. So now you can see how I'm managing my risk. I'm following a scaling plan that fits my potential movements based on past performance, which, again, future performance can be completely different. But at least I got a starting point, and this will help keep me in lane with my risk management on swing trading. So that's how I set up my swing trading. And then as the year goes on, I can reevaluate and see what I'm doing. Because in my trade log, I can go ahead and make adjustments based on what my notes are. So in my trade log over here, I have a notes section here. So I'll make notes on what's going on. I'll also be able to see what my max risk was per trade. I can see what my max move was. And I can see if I'm always leaving money on the table, if I'm always giving money back, like what's happening here. And then I can make adjustments to the strategy or to the plan to maximize my profits. So that's what a good log will give you some good data to be able to see what's going on so you can make adjustments, average movements, all this different stuff. So, all right, cool. So going back over to our strategy. So swing trading done. Okay, so we're going to move on to part two. Part two, that'll be on a separate video. So this way you don't get bored watching a video for an hour. So if you run over to part two, you'll see the rest of the trade log and building the trade plan for the year. And we'll also incorporate day trading and futures trading into that. And then you can see the final product and how it's all going to come together and work. So you can click on the video little box that's on the screen right now, taking you over to part two. And then, yep, you'll be all set.